Welcome traders to an explanation on the latest update. The first thing I'm going to go over are the T levels because they're new to you guys. Okay, T levels as seen here are placed on the chart at either the candle high, the candle low, the candle open, or the candle close. Actually, I don't think it's the open. It's the candle close, high or low. They get placed in real time. So let me see when 11. See, they get removed and placed in real time on the chart for you. See, there was a level just added there. And there's three different types. There is a specific bullish flip, a bearish flip, and a spike. So you're going to see the spikes the most, and the bearish and the bullish are going to be less often. They're going to be less frequent because spikes can happen often, but flips don't happen that often, right? So I'm just going to go over this tutorial on how to use the spikes, and the bearish and bullish should be relatively self-explanatory. Alright, so going back to the start of this Asia session, I'm going to scroll a couple candles until we saw that first T level appear. There you go. So the first T level appeared here at the close of this 5-minute candle. So it was set in stone. In the alerts section, you can toggle alerts for when you see, when T levels appear and when they get touched, right? So you get to see that on your phone as a notification. You can use this in two ways. You can use this as a reversal indicator, so you basically it's like a buy or sell signal, or you can use it as support and resistance. So as seen here, right, we had an old T level, and then retested multiple times. And see, even here, it played for some shorts. You probably got break even here, but here you could have caught a win. I mean, this is through Asia, so it's a bad example, but you get the point, right? So you're going to play that. We have an initial reaction, and then we retest wick. We resist price here. More wicks. Wicks coming through. That looks like a trade that could have hit your take profit if you took that trade. More wicks. Finally, we get the breakout. You get the retest here. And then it's longs from there. Okay? So that's a quick recap on how you can use T levels, specifically the spikes. They're my favorite to use. They're pretty reliable throughout the day most of the time. They'll have their days, but just like everything else, everything has their days, right? So I'm just going to play this until we see the CPI candle come through, right? T level. See, it's getting ran through a couple times. Retested, respected there. Let me circle that just in case you guys don't see that. This is just today's data from Asia. So let's pause here. CPI candle came. It passed the level by a bit, but it did come back to the level. And so we escaped all my data levels. My data levels, they're all the way down here. So this is the type of day where you would use either overnight levels, which lock in at 8:30, or you would use strictly the T levels, right? So today, the T levels were very accurate, like always. I mean, they're always pretty accurate. But today, specifically because you could only trade based off of them, they were very accurate. So this is the level that was placed at the close of the 840 candle. It was respected here and wicked all the way. Because I'm back testing, it doesn't look like it did much, but it went all the way back up here to this rejection block that a lot of you guys trade. And then here's a good example of a sell signal basically, and it comes directly back to T, and then it'll come back up to T, and then from here, right back down. We failed to really break through, and you see absorption here. So you see us come right back to T, and then here we are because we've ran through this 1, 2, 3, 4, 5 times, and then we respected twice. 2 bottom ticks. Here's a winning trade here, and another winning trade here. The range was super small today, so it was your preference if you wanted to trade it. These levels are 40 points apart. That's a pretty good trade to take, to be honest. But once again, we failed to break, so we have another reaction. Here we go. Aggression through T. Break, retest, 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 absorption, aggression, and then finally at the closing bell, we break with aggression, and that ended the week. So that's a quick recap on how to use T levels, support and resistance, and they're pretty good signals as well. Now, to get into the other stuff, let me turn this up here. I need to delete all this stuff. Alright, that's cool. I can undo that, right? Alright, I'll undo that later. Oops. Okay. Let's go all the way back once again to start of Asia. You see the levels here are described as low T. I'll go into this table later, but I just want to show you guys the dynamic color changing. So depending on the T of the day, see the colors have changed. Wait for the colors to change again. I just want to prove my point real quick. There you go. So you just saw all 3 colors. Depending on the color of the data levels, that'll communicate to you how good price action is. So my favorite type of price action is balanced price action. We're not going to be trending too much. We're going to have big swings up and down. So you're going to see price do this, kind of, right? You can see something like that. That's what I consider good price action. A trending price action would look like this, obviously, and consolidation looks like this. Small range, slow movement. Not what I like. So that is in order what I like, right? And the info table also describes everything. I have everything described in the info tables now. So you look at any one of my variables, it's an in-depth description of every single thing. So you won't be left wondering about anything. Everything is fully customizable to you. As I said, this is a tool for you to utilize to help you in your trading, to help you with clarity as well. Okay, so the colors change based on price action. And I just described all the forms of price action. Now let me describe this. You see here, it says daily. So that locks in at 9:30. Let's wait for 9:30 to hit. And where's 9:30? Oh, it's already there. Hold on. Let me trail back to 9:30. Yeah, it glitched. It was high T today. Today was high T. And you saw, I mean, I would describe today really as average T, just because we saw some, like, not two big moves. Like, it was a pretty volatile range, meaning it was big, but the volume wasn't there. That's why it was average. Yeah, you could have caught 70 points and 40 points multiple times, and then from absolute high to low, you could have caught 139. So it was a range for sure. There was money to be made, but as I said, midday. So this locks in at 9:30, and this is basically your daily bias. This is how the day is gonna look, and this changes in real time with the T levels. So if I go back, keep your eye on this here. This. See? Oh, looks like it only changed once this session, but it changes based on the T of like intraday. So it helps you specifically with day trading to help you with your decision. So when it switched from average around here to trending around here, that indicated that there was gonna a trend was gonna start. So what happened? This is a clear downtrend, and it started. So that was accurate. That's the intended use of the intraday and the daily. Is there anything else I can go over? As I said, everything has an info table now, so you can read it for yourself. I'll have this in the course. I'm going to start the course tomorrow because, of course, I'm going to do the update today and then go to sleep because it's currently 12 in the morning. But if anyone has any questions, feel free to DM me or ask in VIP chat. Thanks for listening. I know this video is a bit long, but stay tuned for the update tonight. Have a good night.